everyone, welcome back to my YouTube channel, and this is lesson 2. And in today's video I will be discussing about the difference between management accounting and financial accounting. So let's look at this difference. So I will be giving a very brief explanation of these two. So let's just look at this quickly. So here, management accounting, it involves internal uses of financial information. Who uses information for specific purposes? So management accounting here just has to do with internal uses of financial information. So it involves the inside uses of financial information who will then use this information for a specific purpose. For instance, we have managers, so that we use this information in their decision making, which leads to an attainment of objective of the entity. So for instance, here we are given that management accounting have internal uses of this financial information, and they will just use this kind of information for specific purposes. For instance, here, manager will just use this information to make decision about the performances of their businesses. And for instance, also we have the example of internal users or the inside users. Also, we have employees. So, for instance, employees will use this kind of information. They will use this financial information to make decision whether to demand an increase in their rewards, and so they will only use this kind of information for that purpose, for instance. And coming to financial accounting here. So the financial accounting involves external users of financial information, such as creditors and the government, and who then uses information for different purposes. So here, the financial accounting here involves the preparation of financial statements, and we then have to distribute these financial statements to the outside users. So the outside users, the external users of financial information, such as creditors and governments, and they will use this kind of information for different purposes. For instance, a creditor will use this kind of information to decide whether they should lend money to us, for instance, the bank. And also the government need to look at our financial statement to decide how much we should pay for tax. And for instance, here we say the bank will use this information in their decision making, whether to lend money to the entity or not. So this is a difference. This is just a very brief difference between management accounting and financial accounting. And so management accounting has to do with internal uses of financial information, and financial accounting has to do with external uses of financial information. So this is just a brief brief difference between management and financial accounting. So, and then we have this diagram here, just to show us the difference between management and financial accounting. So right here under accounting, we have financial accounting, we have management accounting. So underneath financial accounting here, we have external uses of accounting information. And there we can see that we have under external users. So the external users are the outside users of financial information. So underneath here, we have investors, we have creditors, we have customers, we have the government or taxing authorities. And management accounting here, underneath here, we have internal users of accounting information. And right here underneath, we have management and employees. So the difference between these two is just to tell us that the financial accounting has to do with external uses or the outside uses of accounting information. And the management accounting here has to do with the inside uses of accounting information. And so that is the difference between those two. And let's look at the financial statements and results. So we are looking at the definition of financial statements here. So financial statements are reports prepared by an entity management to present the financial position and performance at a point in time. So financial statements here, these are the kinds of reports that are prepared by managers of the entity, and the purpose is to present the information concern the financial position and performance of the business at a point in time. So in accounting terms, the financial results of the facts are measured in two ways. So these financial results that are prepared in the financial statements, they are prepared in two ways, and so or they are measured in terms of, for instance, here we have the financial position at a point at a particular time. So to show the financial results of the business, so we have to do this in two ways. Number one is to show the financial position of the business at a point in time. So this has to do with the foundations or the roots of an entity or the entity. And number two, we have to show the financial performance of the business for a specific period. So this has to do with the harvest or the fruits of the entity or an entity. So the financial statements are prepared in two ways: to show the financial position of the business and to show the financial performance of the business. So these are what we call the financial statement. So we have come to an end of our today's lesson. And in my next lesson, which will be lesson 3, I will be discussing about the elements of financial statements. Thank you very much for being part of this lesson, and I'll meet you in my next video.